We got Icon Plus Capital in the place. Reda's here with us. Let's bring him in.
Reda,
there he is.
What's up, man? How's it going?
Look at that. Look at you're in nature. This is amazing.
Absolutely. Right in the middle of summer, not officially, but we'll soak up all the sun we get.
That's right.
Why not kind of conduct this interview or this chat in the nature, in the garden?
I love it, man. I love it. I need to touch some grass myself. So man, this is just reminding me. I think I'm going to go outside after this.
Exactly. I need myself a little bit of greenery and change of scenery, because it kicks up my productivity much higher. So
same here. Even at nighttime when I get a bit of time, I've got a small fire pit. Put some wood in there, get the fire going, get my cigar, get my coffee. That's the quiet time that I get to really focus on what I want to do. It's been working superb. So I'll continue. May continue with the weather.
Yeah. I have probably not exactly the same, but similar setup. A fire pit, nice little grill on the side, right? And then your laptop to yourself, and you just plug along.
Exactly.
That's the best way to work. Great to hear, man. Great to hear. And are you in the UK or where are you at right now?
Yeah,
there's sun. Oh, excellent.
Isn't it super hot there right now?
It reached. I'm not too sure about the exact temperature, but I think it reached at one point 30 degrees Celsius during the day. So we got a couple of days with rain, and storms, but mostly it's been sunny couple of weeks. So I'll take what I get. It's been a very wet winter and autumn. So we're glad to get a bit of sun.
It's funny how my London friends always joke. They're like, "Oh, we heard that the sun may appear sometime in the next month." That's the kind of joke that I'm used to hearing. So seeing you fully in the sun with an amazing background, that makes me happy, man.
Absolutely. And guess what? That tree that you see behind me, that oak tree right there.
Yeah.
Yesterday I was climbing up that tree and I was cutting branches of it. So I thought, you know what? I'm going to do it the proper way. I'm not going to
real activity.
I'm going to do it myself.
Yeah.
Well,
that's the gym.
Are you going to do that live on the show today? Are you just going to put your camera down and just start cutting branches off the tree? I mean,
that might be an ask. But, we could get
all right. Well,
behind me a trim.
Yes. Anyways, great to see you again, man. We love to have repeat guests because guests who've been here the first time and now returning probably came at a time where our technicals weren't quite perfect, right? I think Jimmy was about to say that. So we appreciate you not losing faith in us and coming back. We truly thank you here.
Oh, pleasure. It's always thank you for having me, and it's always pleasure to be back and to be here. So no, and last time it was perfect. I don't know what you're talking about technical difficulties.
Excellent.
As far as I remember, it was smooth sailing.
Excellent, man. Excellent. So what's been happening, man? How is everything in the IPC land? How is everything in the Reda land? Give us a little bit about the things that have changed or that you're focusing on since we last talked.
Please.
Yeah, it's been a rather busy bear market, I've got to say. I was expecting it to be slower than what it's been. I think last time we spoke, we said, downturn, we're going to, spend some time with the family, focus on learning, take a seat back a little bit. But it's not been the case. It's been really active. It's been very challenging to get a good read on the market, right? A lot of people got it wrong on so many different ways, talking about, macros, talking about the blockchain, the cryptosphere, whatever it might be. So we've been spending a lot of time to get our head around what's going on here, right? How do we handle it? How do we play it right? How do we make sure that we are at the right place at the right time to position ourselves for the future? So we've been quite busy with that. As most VCs, we've been quite busy with, the nurturing of the projects that we support. And that took quite some time, actually. A couple of projects launched in the meantime, Ilderoon, and some other project launched. So we supported them quite a bit. We've been signing less checks in terms of quantity than usual. Having said that, I've looked at the stats yesterday for this meeting, but we signed more in terms of size. So less checks, but more sizing. And also, we focused a little bit more on Web 2. Most of our signatures probably over the past 6 months, they've been mostly focused around Web 2 because we just think, there are some industries that will see sunshine sooner or later once the industry settles. And we want to be in there early. We want to lock in our seats. And we don't really care what's going to happen in the short term, lack of liquidity is a big problem, and something that we need to be mindful of, because we don't want some of those Web2 companies to run out of money before the easing of the money. But as long as the runway is decent and as long as they're going to be there for the long run, we're good.
That's great, man. I mean, look, we always here at Dexalot, we always said bear market is a time for building, and the fact that you are sort of seeing a lot of build happening is quite good. Web 2 is interesting. We'd love to dig into that a little bit, but before that, absolutely, in terms of the macro climate, right? Like obviously CPI numbers in the US came out this morning, seems to be like in line with expectation. Like, what is your view on the upcoming year and maybe 2024? Like, obviously 2022 midway through now has been quite challenging, especially in the Web3 space, I'm going to say. But what's your views for the coming year and year or 2 years?
I think that we had some polarized views when it comes to the macros, which misled quite a lot of people, right? So a lot of people really expected deeper doom. And some others kind of read it kind of perfectly so far until now. What's going to happen points forward? Again, that's a $1 million question.
Yes.
But we got to a point now where we said we're not going to really fall for the trap of trying to predict what's going to happen in the future. Why? Because you are at the mercy of a single call, single tweet, single announcement, single change of strategy, single recruitment within the financial system. And what we did is we tried to play it completely different, whereby we said, okay, it's going to take some time before we get out of this, right? The exact time, that's a good question. Probably we don't know it. We don't care about knowing it either. Is it going to be by the time they announce the soft recession, everybody's going to be positioned, right? And it's already going to be cooked in the books, and we're not going to see that downturn that some people are expecting for the sidelined capital to jump in. We didn't really want to bet on that. Some probably would. Some probably would get maybe a short period of time where the dips are going to be quite aggressive, right? Where they could maybe get some great positioning. Are we in that game to really catch the bottom? No. So for us, what we did is we looked at what are the industries that we want to invest in, what are the sectors that we want to to have kind of a finger in the pie in. The companies, we kind of brought it down to what companies, what projects, etc. And then we said, right, what is the good price that we want to get in at? If it's public, if it's private, etc. So we try to work out what are the valuations that we're happy with, and if it gets to that level, we just go in, because ultimately it's not trade, it's not short-term trade. The horizon we're looking at 3, 4, 5 years. So what if it drops by another 30 or 40%? Do we even care? Do we even look at the prices? No.
It's a perspective, I'm going to say, is quite refreshing and quite different than what we've observed from most of the funds out there. Like, there's a lot of, if you remember, like towards the middle of 2022, there was massive leverage because everybody was in that game that you said you don't care about, right? Everybody was trying to capture the next jump or next dip. Positioning was massive, which led to liquidations, which led to, companies blowing up, which led to exchanges blowing up, which led to liquidity disappearing. So your approach, you're still around, fantastic at these things, and your approach seems to be working, right? That's like, I think, the evidence of that. So fantastic to hear, man.
Yeah, no, it's been keeping us safe. We've managed to dodge quite a lot of bullets, utilizing that. We probably didn't maximize profit in certain instances where the opportunity presented itself. But again, it's not about that game. The game is more about protecting capital and then making return of that capital over the horizon, or the time frame that you set yourself. If you wake up next day and you're not millionaires, so be it, right? Because the target is you have a certain time frame that you need to deliver, and the shareholders are happy with that. As long as we deliver within that time frame, everybody else is happy with us. Right. So we're trying to keep it very simple. It goes a little bit more complex than that. I mean, we don't just go on bulk buy. We're probably gonna spread our buys over certain prices. We look at it, we kind of mix it with a little bit of technical analysis as well. We look at the various prices and we say, right, these are the levels that we're happy to buy at. And we change the percentages based on the macro. So we might go in a little bit aggressive if we feel maybe it's a shallow macro bottom, or the opposite. So there is a little bit of a complex algorithm behind it, that we try to adjust and adopt as much as possible and respect. I think it's very hard to respect it, because when the time comes to call the decision, that's when your head starts turning, because you start thinking about
that's where the emotions and discipline come into play, right?
Exactly. I mean, when it comes to publicly listed stuff, we just got orders in for the first orders. So typically we'll have 3 orders per company, or per stock, or per share, or ticker, or whatever. And we'll have 3 on average. Sometimes we have a little bit more. Sometimes we have a little bit less. Sometimes it goes down to 2. But for the first one, we will have the order keyed in. So we don't even, because the minute we key in the first order, we almost kind of bit the bait, and we have to follow through with our plan. So the first order is already keyed in. So it's a little bit outside of our hands. It's in the exchange. It keeps us a little bit exposed to exchanges, but as long as we're aware of where we put our money, it's okay.
Yeah, makes perfect sense. Now, you mentioned something earlier in the conversation as well. You said you're at the mercy of one tweet, one announcement, one press conference. A lot of people would argue that your sort of fate, hangs based on what Powell is going to come out and say and all that good stuff. Like, what do you see in terms of the regulatory landscape in Web3? I think tweets or statements or lawsuits, I'm going to say, affects especially Web3 a lot nowadays. And how do you see the regulatory landscape evolving in the next, let's say, year to 5 years?
Bit controversial. I love what's happening. I don't
know if that's controversial, but okay. Yep.
I am with regulation in the space, more regulation, tighter regulations in the space, as long as they let it thrive. It needs to be just the right amount of regulation to not kill innovation, flexibility, etc. So we need to find that right balance. From what I've seen over the past few years, it's been a little bit of cowboy land. Okay, there's so many things that's happening. Wash trading, lack of accountability, people, exchanges. We've seen what happened with FTX. We heard about we don't know the rumors about what's happening with Binance, right? All of that, as a consumer, it doesn't make me feel comfortable. How safe is my money?
Right.
How am I being treated?
Right.
Am I being traded against my positions? Right. How many times do they wash trade? How many times do they buy and sell a single asset in a certain time frame? Do we have the data? Right? Who are the market makers supporting that? All those questions and more, right? This is just the tip of the iceberg. There's way more than that. I think the more regulation that we have when it comes to that, the safer the space generally would be. And then at that point, I think institutions will start taking it seriously. And this is when we're going to start seeing more adoption. Because for now, I heard some people are bullish, and you could be, but what are the grounds for being bullish? If you are a big institution with billions of dollars, if not trillions of dollars worth of capital, worth of investment capital, and you want to invest in Web3, are you going to really rush now to buy Bitcoin because what's happening in Binance, the biggest firm in Web3 now being, looked into and by the SEC? No, this is horrible. So we've got to really clear that out of the way, and hopefully nobody's done anything wrong. And we're just going to put the outlines. These are the works. This is what we're going to have to work with. This is what we believe. This is the audits that's going to take place. These are the firms that would be taking care of that. That will make everybody's heart a little bit at ease, because that would help us. That would help adoption. That would help liquidity. That would help capital that's been sidelined to come back in as well.
Absolutely. So, I mean, it's very reminiscent for me, like what's happening. Maybe the way it's happening is slightly different, but if you think about the 1990s, early 2000s, similar stuff happened in the equities markets, actually, right? The Reg NMS regulation actually came to play early 2000s, and what that mandated at the time was that if you're a access provider for traders to access stocks, you had the obligation of providing them the best bid or offer depending on their trade, right?
Yep.
What that meant is that every person that's providing access had to give you what was perceivable as the best price at the time. Now, that regulation was fought a little bit originally, but it ultimately led to prices compressing, because now you had service providers out there, market makers, HFT shops out there that would actually align prices across all exchanges at a net effect of this regulation, so that everybody got tighter spreads and better liquidity in the end. Yes, of course, some of these guys co-located themselves to be as close to the exchange as possible so that they could eke out that additional profit. But the net benefit to the end users, even though there was a lot of bad, negative propaganda around it, net benefit was the prices have compressed significantly for people to trade with, right? I feel like, the current approach with, enforcement actions, etc., whatnot, I mean, that's arguable. I'm no expert. I'm not a regulator. I never worked as a regulator. I have dealt with, various regulatory bodies in the past, but you got to start somewhere. And I think I am a firm believer of what you're saying. Like, we have to start somewhere. 100% agreed that we need to discuss about stifling innovation or assisting it and putting the the guidelines around it. But it has to start somewhere. Whether that starting point is the best possible starting point or not, it's not going to matter once we arrive to the point where this market becomes a little bit more orderly, right? Exactly as you said, there's been too many cowboy stuff out there over the last, 10 years. And what that also affects is good projects out there with proper teams, proper intentions, proper sort of institutional mindset got affected because maybe like the behavior of the product was different, et cetera, et cetera. So I think this is more like a cleaning cycle. You know how you cook like a bunch of food in your oven and you turn on like a clean cycle and it cleans it out? This is how I view it.
I couldn't agree more. It's needed cleaning cycle. Maybe, the format of it could have been a little bit better. The way it's being managed, the way it's being shared, or the way it leaked out there. I'm sure there is a lot more to it behind the curtains, and that there were conversations back and forth for quite some time. I don't know what are the drivers behind the timing of it. Are they legitimate drivers in terms of really bringing clarity to the regulatory kind of space, or was it being timed because there has been an exodus of capital from the United States, right? And that's when people got triggered and they said, well, we've got to do something about this because it has, right? And there was a letter from the SEC, obviously, that had proof that certain money is being transferred from certain account to certain accounts. And they're only talking about one entity, right? There's so many entities out there that could be doing exactly the same. And eventually we'll see their turn come as well. Yeah. So I don't know what are the drivers behind it, but bottom line, regulation is good for me because it's extra safety, extra peace of mind. It will help to,
and it will clarify the rule book, man. It will clarify the rule book. The other thing I'll say, by the way, yes, SEC is doing a lot of stuff right now, but there are a lot of other regulatory bodies, whether it's Dubai or whether it's Hong Kong, they are creating their own rule books, right? Hong Kong actually has done a lot of work in the near term. I think they're working on some DeFi specific guidelines for companies to adopt. And I think in reality, good businesses and legitimate and sustainable businesses will ultimately look at where they can thrive the best. And that's when, like innovation and businesses shift. And then maybe some of the too aggressive things get rolled back. I think this is like, again, just the beginning of that purge cycle where people are now finally thinking about it. And if they get it wrong the first time, they'll get it right the second time. That's why these processes exist. That's kind of how I look at it.
Yeah. I think all those financial hubs, eventually, sooner or later, they're going to start competing for business, right? And to compete for that business, they need to have the right regulatory framework. So, as you said, Hong Kong, Dubai, even Singapore, right? They're making moves around the Web3 space, and they have certain regulations and support around it, because ultimately they see it as becoming a big, important segment in the financial market, without a doubt. I think the lack of value that's being created in Web3, real world value, seeable, touchable value, slowed down the desire of the regulators to really do it, because they wanted to see, okay, apart from store of value and transfer of money. What is it really bringing us on the day-to-day, right? Okay, what is that real world value that this token or coin or project is bringing?
Right.
Now that they start seeing some of those creative projects coming up and bringing value and being integrated with Web2 companies and being integrated with apps and products that we use on a daily basis without even knowing it's Web3, I think they're going to start paying more attention to it because they would want to be ahead of their, they don't say that, but they're competitors in terms of, financial apps.
Of course. And I guess in that vein, what verticals do you see emerging and do you see as potentially the most successful? We obviously, you also obviously mentioned Elderun. Would love to hear a little bit about that as well. Like, tell us a little bit about like what verticals in Web3, and of course, then let's talk about the Web2 aspect that you mentioned. Like, what excites you the most in that regard?
And let me say too, guys, let me just jump in real quick. Chad, if you guys have any questions, remember, you can, if you have a question for Firestorm or Reda, you can jump in at any time. But sorry to interrupt there, fellas. Please continue, Reda.
That was cracking. Thank you. Well, what a time to be in the DEX sphere now, right? So this is ideally for me. I mean, firstly, I think it's the best time to be working on a DEX, right? To self-custodial kind of services for the traders, for people that want to utilize the various services that DEX could offer, whether trading, whether exchange of the same value. Dexalot, you've just announced yesterday, the USDC and USDT, which is amazing in my view. And then many things, probably staking and some other kind of added value services alongside that, maybe even custodialship, some sort of third-party custodialship, maybe. I think good DEXs will really thrive going forward. We've seen them getting better and better over time. If you look at obviously the first kind of iterations of was it IDEX before, and then Uniswap, and then Sushi, and then some other ones obviously started coming up. Now we're seeing DEXs that have incredible speed. So you don't feel that you're doing a transaction on the blockchain, and it feels very intuitive and very quick. That are competing in that space, and a lot of them would start competing on aggregators and liquidity and volume, right? And then bring in obviously more users, cross chains, etc. So for me, I'm pretty bullish on having on DEXs, generally speaking. I still believe games, they need to find, or gaming within Web3, they need to find that right balance between onboarding users, selling the game, and making it as seamless as possible. Nobody cares where the game is, as long as if I could save my NFTs, that's an added bonus, right? If I could make something out of my NFTs, that's an added bonus. If I could make some coins or tokens and then that have, a value to them that I could exchange in the open market, fantastic. But gamers want to play the game because they like the game, and they want the game to be very seamless. There'll be a couple of clicks, no waiting, no delays, no issues, no wallets, etc. Cool. So somebody needs to really find that, make it as seamless as possible, but at the same time, find a solution to the high emissions around games, because that's killing games now, because all of them, they'll have some sort of emissions. Some, they come up with some really creative stuff where they integrated their token economics with the in-game economics, right? And that brings down the inflation a little bit. But they need to find a solution around the emission. The one that would do that would merge between cracking game, a captive game, a seamless game that looks and appears just like a Web2 game, hidden. You could have a wallet, or you don't need to have a wallet, and the game will create it in the background for you. There are games that are doing that, as well as the token economics and the in-game play economics. If somebody could merge all those four into one product, that'd be an awesome thing.
Absolutely agreed. And Web2 games are still dominating, right? Diablo 4 just came out.
Yep.
I think they're selling it like at $80 a pop per game. And then you're just playing in this closed ecosystem. And I've actually seen the end game credits. They have massive teams, like the team that put together Diablo 4 is like hundreds of people. Like, how do you? So, like, I think the challenge, that most of these upstart games utilizing the new blockchain concepts, whether it's the blockchain itself or whether it's like some sort of token-based capital model, etc. The biggest challenge they have is funding in the near term. How do you, what are some advice that you can give to projects about being able to compete with those super hundreds of millions of dollars funded projects? Like, what are the things? What are some hacks, if you have any, that you can share?
I don't think they can compete with them. Quite simply as that. So I think they need to look at it from a slightly different perspective.
Sure.
They need to understand their strength, and then work to them. Right? You're not going to compete with somebody that's got a pocket with $100 million and a team of 200 game developers, sometimes even larger than that, and you are, 3 guys office, right? It's just very difficult to be able to compete with them. In terms of funding, I could answer that in 2 parts. Funding, during the bull market, it was a lot easier than now. People could generate enough funds to be able to deliver on their vision. Okay, that vision depended on the size of their vision. Some had bigger, visions. Some others had feasible, achievable, humble visions, and they worded it and they explained it in a fair way, and they were able to raise sufficient capital to achieve it, and that's completely fine. Not all games they need to be 3D, AAA,
right,
high quality games. You could kind of scale that down a little bit to be able to achieve it with the money that you have available to you. I think more importantly, they need to have a business plan. Not just, I'm just going to build a game and people are going to play it. What is the business plan? How are you going to onboard those people? How much is it going to cost you per user that you're going to onboard? What are the channels that you're going to utilize to onboard those, right? What's the cost of the marketing, or the tournaments, or the influencers that you're going to work with, etc. Right? Business plan, because the game developers, they would know what they're talking about because they've done it in different game houses or gaming studios. And if you give them enough time and enough money, they'll be able to develop it. They will be able to put their game together.
Sure.
Right? But it's about how do you sell that game and how do you adjust to the market accordingly? Because you might put your vision and then you go to the market and they tell you, it's not good enough. It needs a few tweaks. Are you flexible and nimble enough to make adjustment to it, to change it to the market up, and those are the guys that would succeed. But for now, generally speaking, anything to do with NFTs, anything to do with games in Web3, really struggling to raise money. Not a lot of VCs are offering money right now, and people are waiting. And I'm seeing even gaming houses and studios in Web2, they're not rushing to move into Web3 yet. Yeah. Some have started to.
Because they don't need to, right? Like right now, they still have a very nicely working model and the competition isn't strong enough. This was basically what I was trying to ask. How do you compete to make them move into Web3? That's,
You've got to be successful. They're going to have to start worrying about losing market share, right? They're going to have to see a working, successful model. Okay, they've delivered the product, they've acquired the users, the token economics are working, and it's working as intended. And they had few curveballs and they dealt with them accordingly. Then those gaming studios will start saying, hang on, we're losing opportunity here, or we're losing market share, or this is maybe a new vertical that we need to pay a little bit more attention to. Because it's very easy, if you're a large company, to just go and acquire a successful Web3 company. Simple as that.
That's right.
You don't have to go through the headache of, learning how to do it. Wait until it's successful and just go and put some money towards it. So what if you pay 50% more than you should? Because the acquired knowledge you're going to get into your team that you're going to put into
speeds you up.
Exactly. Yeah. So I don't think they've seen that much challenge yet. There are a couple of houses that started looking at gamings now. They've just started, but it's not something that's been spread wide. And I think until we see consistent success or good signs of, okay, somebody found the magic formula, right? The minute they see that, they're going to jump on it so quickly, and you're going to start seeing so much money coming into the space. Yeah. They're too big to start throwing money around. They preserve capital until they see something that's working.
Yep, makes perfect sense.
And it's like you said, like, it doesn't have to be some huge AAA game. I think if someone came with a game that was just very fun and you could trade and have NFTs and those Web3 features, I think that would nail it. You know what I mean? So it's like, look at something like a mobile game. Like, look at mobile games. Look at something like Temple Run or Angry Birds. Or, I mean, I'm showing my age here, but those are the ones that I remember, right, from back in the day. Those are simple games, but people love them because they were fun, right? Yeah. So I think that's something that is also that people aren't touching on enough, is like, well, if we're making these games, they got to be fun, guys, right? So
exactly.
Yeah, fun and easy. Fun, something that you have mobile, and you stack at the airport and you put it out, and you kill some time with it. It doesn't have to be more than that. It doesn't have to be over complex.
Exactly, man. Exactly.
So talk a little bit about the Web2 stuff that you guys are doing, because that's unusual for our show, and would love to add a little bit of spice and talk a little bit about Web2. What trends do you see? What's interesting? What are you looking at?
Yeah. Okay. So I am, my background, Firestorm, my background in terms of the oil and gas industry and the investments on that sphere. So I'm big on that. I'm big on renewable energy, big on cleaner future, and the technology that goes into it, whether it's solar panels, whatever that might be, right? So I thought a lot of people now are saying EVs are dead. And there is some sense into that, because they're in quantitative tightening. In EV manufacturers are kind of liquidity and cash heavy, because they need to build the plants, they need to buy the metal, they need to bring the staff, they need, quite a lot of years before they really start generating profits, right? Because they focus the first kind of few years of their life in terms of really building the company. So I wanted to, we thought, okay, anything to do with EVs and anything to do with renewable energy, it's a mixture of the two, whether it's purely electric, whether it's something to do with hydrogen, for example, could be a great fit. So we found a couple of companies that do that, hydrogen companies. So self-charge, charging stations and all that kind of stuff. And we invested quite heavily in them. So we bet in on cleaner
hydrogen. Yeah.
Hydrogen.
I literally saw, I don't know if it's an ad or if it is something, either Twitter or on Instagram. I can't remember anymore. Like, it was in the morning after I woke up, like a first 1,000-mile hydrogen-powered car. It looked like a supercar, but they were basically testing and driving it across the country or something. Like, it seems very interesting.
Yeah.
And it was called EVs boring. So I thought, I thought that was an interesting thing to say, but
Well, I'll tell you what, hydrogen is quite an interesting thing, because it's but a lot of people are scared about it because it's combustible.
Everybody thinks about Hindenburg, right? Oh, the Zeppelin that burned down. How do we make sure the car doesn't explode? Bro,
Exactly.
Teslas don't burn.
Because that never happens to Teslas.
Yeah.
In theory, it's very light. If there is any leak, it's going to go up in the air very quickly before it ignites, generally speaking. And at the same time, so I can't mention the name of the company yet because they haven't fully finalized the table and announced it. So we're trying to respect them. But this company, they've got basically on a full tank, you could go for 800 miles.
Damn.
Yeah. And it's quick charging. So even if you don't find, so they've got charging stations where they've got portable hydrogen tubes, right? And you could just click of a button and the tubes in your car will kind of eject themselves. So these are additional tubes than the main tank. And you go to those charging stations and you could just switch your tube. So it will take you literally 2 minutes.
Sure.
And you switch the tube and it will give you another 400 miles on top.
That was supposed to be available for EVs as well. I remember very early days, Tesla was claiming, oh, you're just going to like do a drop-in battery replacement, which I don't think ever happened. But you can definitely do this with hydrogen, I think, because it's similar to fossil fuels in the sense that it's like a combustible gas, right?
Exactly. Well, EVs, we invested also in a company called NIO. And it's a Chinese kind of the Chinese version of Tesla. I believe even Elon Musk is in is a shareholder.
Interesting.
And one of the kind of innovative ways is quick charging stations, which is basically swaps your battery. So the battery is kind of installed underneath the car, and then you'll go onto those stations, and then you will park, and it's autopilot and all that. So you will park it in the designated kind of slots, and then you just put it on autopilot, and then it will reverse itself back into where it needs to be swapped. There is a robot that will come underneath the car, will unplug the battery, replace it with a new battery. The whole thing takes 5 minutes. And then you've got, so if you don't want to, if you're traveling and you don't want to wait for 45 minutes to, how long it takes to charge your battery, you could get it swapped in 5 minutes.
It's awesome.
Yeah.
Very cool, man. I'm looking forward to this. What about space? Are you guys looking into the space industries at all? That's one thing that I'm looking to meet somebody that has a lot of knowledge on. I was hoping they would be you, but
not a clue.
No clue on space.
Well, we do have a question from
let's do
Tim
it.
Shan's in the chat. He's getting into the nitty gritty.
How does Reda trade? He's on Twitter with all kinds of trading ideas. What's the approach?
What's the approach?
He's explicitly asking for financial advice, so we'll let you answer however you wish.
Okay. So trading is something that I did less during the bull run because we were incredibly busy doing the other parts of the business, right? So we just didn't have. We had people that took care of the trading desk for us, but I did less of it. But now that we have a bit of time in our hands, I'm starting to kind of get back into the groove, right? Started to warm up a little bit. So we have some long-term positions, but a lot of the positions I do nowadays to keep me busy are purely short-term. And then another thing that I thought about, so I was like, there's a lot of people on Twitter. There's a lot of, trade ideas and charts and setups and what have you. And I thought, what, I do have a small following. If I could help these guys to generate a little bit of capital in the meantime until, the bull market kicks in, why not? So I came up with a couple of small ideas. The first one is $100 to $1 million, right? It's a little bit,
I don't know if that's a small idea, man. That's a feat. How's that going?
We started about a month ago, and we are at roughly, don't quote me on the numbers, $1,700.
17x in the back.
17x.
That's amazing.
It would have been more. It would have been maybe 40x. But last week I took a 50% drop.
Sure.
I was having a bath, and the trigger, stop loss didn't get triggered. By the time I came back, that trade was about 220% down. So it took away about $1,000 away from it. So I just thought, I'm sharing ideas anyway. When I take a trade, I will share. I don't share the size that I take. I just say, look, I'm short here for those that want to learn from it, so they could reverse engineer it and they could work out why I'm short and what did I see to be short, right? So we could learn from each other on that front. And then those that are with me on the $100 to $1 million, if they finish on $10, $10,000, $15,000, whatever that might be, that would be of help.
That's still meaningful money, right? For a $100 investment. It's
pretty good.
And the purpose is to gain as much capital as possible. And I said, look, I've got a few great picks on Web3. These are not private investments that we invested in. So these are completely separate. These are things that they could go onto exchanges and buy, things that are tradable, right? I said, I've got a few picks, but I don't want to share the picks now because I don't feel it's the right time. When I go in on those picks, I will let you know. So the idea is those two ideas will merge. So I want to help people that follow me with sharing with them some alpha in terms of the picks that I'm going to pick and also the timing when I'm going to pick those picks. But ideally, between now and then, I want them to generate as much cash as possible so that when we do the picks, they'll have a little bit more capital to invest into those picks.
So, your approach, kind of, right?
Yeah, it's help, and I believe in things come back. And if you give
karma, man.
Are you guys following Reda on Twitter, chat?
Yeah.
Are we following Reda on Twitter yet? Come on, hit the bell while you're at it.
Thanks, buddy. Thanks. And tell me, guys, how is Firestorm Capital going? We haven't caught up for quite some time. I know you guys are always up to great ideas, and you're very, very interested in space as well. So
quite honestly, that's a question I think you got to ask Jim and Mike. I'm less involved there. I think they're capital tied. Are they? If they are, they can comment. But it's going well. It finished last year positive, I believe. Obviously, big supporter of Dexalot. One of our partners have been working on figuring out how to best utilize Hummingbot and add additional market-making features. So, in terms of vision and beliefs, very aligned with what you said, right? This is the era of the regulatory sort of climate shift. In fact, I think a newsletter was published maybe earlier in the year. I can't remember anymore. And I think that newsletter explicitly said we expect regulatory changes to come quite quickly this year, and they're happening, right? It's one of those times where I think risk management matters, capital preservation matters, and I think that's, again, I don't want to quote Jim or Mike or anything like that, but I think that's what they're focusing on, quite honestly. Jim, if you're on, feel free to comment. Given that, Reda,
I think he might still be in the chat here. I could be wrong, but it's like you guys said. It's like we're in an oven. We're cleaning the oven right now. We're running the oven cleaning cycle because your food tastes better when the oven is clean, right? So we gotta have it. We gotta have this cleaning cycle, guys. We gotta go through it. Reda, I gotta ask you two things before we let you go, man. You know how you could throw it back to me. First of all, I'm gonna take off my hat because it's getting a little tight. You guys were dropping so much knowledge, my brain started to expand again, and it's just a bad time when my hat's too tight. So I gotta take that off. But first of all, we got to have you back, man. It's always so great when you come through. It's another one of those times where we've been talking for almost an hour, and it feels like it's been about maybe 5-10 minutes. So can we have you come back to the show in like a couple months? We'll talk about some more.
Anytime. Always up for it.
Let's do it, man. All right. And I got to get a request. You're a vet. You're an In the CLOB vet. I think we played WizKid for you last time. I could be wrong.
No, it was one of those Afro beats.
Yeah, it was an Afrobeat song. I just can't remember what the artist was. Did I say I don't remember who it was. But
I can't remember which one I've asked for, but I know exactly what I would be asking for. So the genre was Afrobeats.
Well, what are we doing today?
Well, let's go a little bit classic because we talked about how we play in it during this bear market, and I think it's quite suitable to go. I did it my way.
The Usher song?
Yeah.
Dude, yeah, let's go. My Way by Usher. Dude, producer John, I already have that in my library. We are good. Some 90s R&B in the mix. Dude, I am all about it. Let's go. Oh, my God, I love it. Guys, Reda is an In the CLOB vet. Make sure you're following him on Twitter. It's Reda _
100 to a million, guys. Follow and learn. You'll at least learn something. Even if you don't make it to the million, there's information and alpha there. So
knowledge for the people. And actually, you know what? I have one more question. Are you still you're a bit of a boxer, right?
I am, yeah. Indeed.
Okay, so here's what you don't know, guys. Here's what chat, you guys don't know this either. Someone in the Dexalot office has been kind of learning the ropes, getting in the ring themselves. Dexter.
Right.
Dexter. He's got his gloves, and he joined an axolotl boxing gym. So we're thinking maybe one of these streams, we get a celebrity boxing match with Reda and Dexter. What do you think? In the cards, maybe? Can we get a maybe on that?
A nice little friendly, you know?
I'm up for it. You
for
guys
charity.
Right? You got the IPC gloves. Did you get used Firestorm?
I have a dude. Oh my God. You just reminded me. The IPC swag that like you guys have, like so I'm gonna say by far the best, along with Dexalot swag, of course.
It's super
best sweatshirt, actually. Dexalot never produces sweatshirt. Oh, actually, no, there is, but like it's different, like a best hoodie ever. Like my wife stole it from me because it's such good quality, and she like won't let me have it, but I have the gloves.
I got you, brother.
It's amazing, dude. It's amazing. Thank you. Like those things are bar none. I swear to God.
Pleasure, man. Pleasure. I'll ship you some more.
Yeah, I'm trying to find the picture. I
never say no.
They're so good, man. Those are so good.
That's what I should have worn. But like the problem is so hot right now. I think like that gear was winter gear, but I think there's t-shirt. Next time we do it, I'll have IPC gear on.
And I'll have the Dexalot one on as well.
Let's go. Sounds good.
Let's do that.
Awesome, man. Awesome. Reda, thank you so much for being with us.
Thanks for coming, man. Always a pleasure.
I got the Usher coming up for you. This is awesome, dude.
Awesome. Thank you.
Enjoy the beautiful weather.
We'll see you next time, brother.
Speak soon.
Bye-bye. My man.
Bye.